Hi there, it's John. I'm very pleased to be joined today by Dante Disparte. He is the Executive Vice President in charge of policy and social impact at Diem. You might be familiar with Diem in the past being referred to as Facebook's Libra, sometimes called a cryptocurrency, but we're joined by Dante today to learn more. Hi, Dante. Thanks for joining me.
Hi, John. Great to be on.
I was hoping we could get started just with a bit of personal introduction and a discussion of what you do at Diem.
Well, sure. So I am the Executive Vice President responsible for policy and social impact for the Diem Association. Have been here since it was originally introduced, so I have had really the great pleasure of being a part of the journey since the very beginning. Back in June of 2019, when the original then Libra white paper was introduced, and with it a vision of making a more inclusive payment system that could serve more people around the world. So before that, I'm an entrepreneur as well, started a company in the risk and insurance industry, and have worked very closely around a series of emerging and complex risks, which was my original draw to the cryptocurrency and blockchain world.
Thanks for that intro, Dante. Can you just give us the quick introduction to how Facebook came to be here today with Diem? There's a little bit of a history in terms of how it came about, and I thought that would be interesting for our audience.
Yeah, so the project was originally incubated at Facebook, and since it was announced back in June of 2019, there were a number of big goals around, one, standing up an independent organization, the Diem Association, functionally as an independent member organization based in Switzerland. We have 27 member companies, each of which contribute to the governance, the technology roadmap, and to the overall success of the project. The other piece of the puzzle, of course, is the technology standard, the Diem blockchain and the associated technology around building a more inclusive payment system is also an open source standard. So the goal there is to promote more vigorous competition and to spur responsible financial services innovation, leveraging the Diem blockchain. And so Facebook remains one of the members of the association under the digital wallet Novi. And over time, of course, the expectation is that as this network goes live, more and more people will get access to the payment system in a compliant manner in the respective countries that they operate in.
Something that I find very interesting, you mentioned it a couple of times, Diem is an association, and there's a consortium of industry partners who are working together on that. Can you explain a little bit more, not only who's involved, but a bit about why that strategy is important to the success of Diem?
Yeah, it's sort of a novel, I think, approach to corporate governance, that especially when you consider many aspects of the financial services domain tends to be heavily centralized, not only from a corporate governance point of view, but critically from the lens of financial infrastructure. So we have a number of big examples in the United States and around the world of the challenges and the limitations of single source of failure financial infrastructure, whether it's so-called honeypot databases like the ones we saw exposed during credit bureau breaches and hacks some years ago in the United States, or the fact that so much of the financial infrastructure effectively has a single point of failure and or it's operating on legacy systems that are not conversant with one another. We think there's something to be said for a governance model that is following this kind of consortium or association approach, where in effect, every member of the association would run a node on the Diem blockchain. Those nodes would all serve as, for lack of a better term, functional shareware, if you will, to carry out the simple activity of validating transactions on the network. But at the same time, because of the open source nature, we expect this type of payment system to also spur competition and more open innovation. So since June of 2019, the code base for this has been in the open source. And so there's a range of developers and other opportunities around the world to begin to leverage that, shortcutting what is a pretty substantial R&D expenditure by having the robust technology already available in the open domain.
I think we've talked a fair bit already, Dante, about some of the mechanics that make Diem unique, but I wondered if there's any other parts of the development that are ongoing or coming up in the near future that you think are important to mention and distinguish about what you're doing with the association.
Yeah, absolutely. I think the key piece that is really unique is, in fact, the human need, right? That when you think about what has transpired over the last year with the COVID-19 pandemic, one of the principal use cases we're designing for is cross-border payments or remittances. Historically, pre-pandemic, remittances are about $700 billion a year. the course of the pandemic, so in 1 year, about $200 billion of that figure has been shaved off. As you can imagine, a mix of factors on both sides of the transaction. On the sending side, clear, massive historical levels of unemployment and underemployment. And then on the receiving side, you have the painful reality that on the receiving end of these types of payments, so much of it is analog, physical, and effectively expensive. And so on average, a remittance costs about 7% to send. The UN has a goal of dropping that cost to 3%. And so one of the core use cases we're designing for is to enable peer-to-peer payments and effectively to enable people to have more control over how they spend, send, save, and secure their money. What I call the 4 S's of payments. That's the principal use case we're designing for.
It makes a lot of sense, and it's a noble cause behind it when you put it that way. Especially, what have been the biggest challenges? Because it is a bold vision, and Facebook is known for moving quickly. Can you tell us a little bit more about the roadblocks and things that you're trying to move beyond?
Yeah, well, and to be clear, Facebook, of course, is a member of the association, but not really driving the association. So the association has an independent leadership team, an independent structure, and the governance model that I had mentioned at the outset. And so what we're trying to do and how our commitment has been since this was introduced back in June and where we stand today is to really make sure we get it right. There are 3 sort of layers of readiness that we have to contend with. One of them, of course, is operational. The second is technological. And the third is regulatory. And so, personally, I've been very heavily involved since the outset in a range of global conversations, not only in Switzerland, but with stakeholders and regulators all over the world. International bodies like the Financial Stability Board, the FATF, the Bank for International Settlements, and a range of other national authorities have been effectively in dialogue with us. And not only with us, but more generally in dialogue and review about the opportunities, risks, and responsible ways of harnessing digital transformation when it comes to payments and money. One point I would make, as you know, is that about 80% of the world's central banks are at some level of exploration with so-called central bank digital currencies. And so in that world, we think this type of infrastructure becomes digital commons and has that opportunity of upgradability with the public sector.
That's a really important point to mention, and I wonder if we'll have a few more points on that in just a second. I wanted to talk about regulation a little bit, and before we look at some differences between different regions of the world, it's important to mention you are based in Switzerland, and as you say, you have had some discussions. The DLT legislation recently came into force here in Switzerland, and that was considered to be something quite landmark. I was wondering if you have comments on that, and then we can talk separately about some of the other regions in the world.
Yeah, sure. Well, Switzerland, I think more generally has had what I think is a model approach to regulating fintech and crypto assets and blockchain-based financial networks and payment systems. Many regulators speak of the concept of technology neutrality, activity-based regulation, and I think Switzerland has really been a hallmark of that approach, while at the same time not throwing standards or caution to the wind, right? So there is something to be said for a very prudent but not heavy-handed approach to regulating innovations, and so we think that kind of model should be emulated elsewhere around the world. The other piece of the puzzle that I would add is, especially when you consider crypto assets and digital assets, is that if you're looking at activity-based, technology-neutral regulation, you must also consider the economic behavior of the digital asset as well, right? So that many assets such as Bitcoin are really being designed as speculative instruments or investment instruments. Others are being designed for transactions, and others, in the case of stablecoins or a project like ours, is really being designed to be a payment instrument first and foremost. And so then over time, as central bank digital currencies enter the digital asset or crypto asset world, we would then have another instrument which to consider. But so I think how regulators approach the whole space and what type of innovation and competitive posture they take in terms of promoting responsible actors is going to be really critically important.
That's an excellent point. Maybe to look at it in 2 different lenses, how would you compare the approach that's being taken in Europe to the standard approach that the US is following?
Yeah, I mean, I think both sides of the Atlantic have really followed one principle-based approaches, right? So, if you rewind the tape, I think fintech promoters must have a healthy respect for regulation, because if you rewind the tape on the last decade, there have been a lot of examples of consumer risk and frankly 101 failures of risk management, which invariably ends up getting picked up by the public sector or taxpayers who have to fund losses, or the consumers themselves who have to fund losses. And one really powerful example of that is the case of Quadriga CX in Canada. This was a cryptocurrency exchange. About 120,000 or more Canadian investors had digital assets on that platform. And effectively, because of the not your keys, not your crypto reality, all of that money effectively disappeared. Whether it was internal fraud or other issues, I still think remains to be seen. And I know there's quite a lot of reporting on that. But that nonetheless really underscores some of the potential risks when these types of innovations are moving faster than regulators can sort of responsibly put guardrails around them. So personally, I think both sides of the Atlantic have taken very principled approaches. And I think a lot of the international work and conversations via the FSB, the Bank for International Settlements, the World Economic Forum even has a digital currency governance consortium, which I'm a part of, are all trying to come up with models in which innovation, inclusion, and integrity are not seen as trade-offs, but rather the three pillars can work side by side. So I laud the approach. My only admonishment is to not be so heavy-handed that you kill innovation. But that, of course, takes a balancing act.
Speaking of which, we talked a few minutes ago about the topic of central bank digital currencies, and a lot of people see that as a major threat to what's going on in the more liberal or libertarian cryptocurrency space. And as you distinguished, Diem fits somewhere in between all of that. Could you spend just a couple of minutes and distinguish a bit more how that all plays out, or how you see yourself in the landscape?
Yeah, it's a great question. And as you can imagine, it's an incredibly nuanced question because, one, you have to begin with first principles. In my mind, control over monetary sovereignty and monetary policy in an economy is a public sector activity. It's a public sector activity that has evolved over hundreds, if not thousands of years, right? To borrow some thinking and some commentary from our friends at the Swedish central bank, the Swedish Riksbank. On the other hand, you also have to contend with the reality that technology has transformed virtually every facet of our lives, from the way we exchange, the way we learn, the way we operate, but perhaps for how we exchange value at scale. And this is, in so many ways, blockchain's superpower. It's to enable an asset to only be spent once, and to enable sort of the type of accounting fidelity that would be the envy of large accounting firms at scale without a lot of intermediation. And I still think we're in the opening act of what that looks like over time. And we should be very encouraged. I don't see it as a threat that many central banks are interested in these innovations, because if anything, it would preserve their control and their oversight over monetary policy if they digitized. The balancing act, however, is to ensure a vigorously competitive wallet environment and financial services environment that truly espouses the same risks, same rules, technology neutrality approach we mentioned before. Right now, if you wanted to create a CBDC, you could do it overnight. And the simplest way to do that, as I characterize it and others in the space characterize it, it would be to create a hybrid CBDC. In effect, allow payment systems operators and technology platforms such as our own to plug directly into the central bank trading window and get access to the risk-free rate. That would be the fastest way to make that innovation possible. Because I think even if you did build a CBDC, but you didn't address last mile frictions and end user level utility, you would effectively have lower friction wholesale banking and two-tier banking, but households and citizens and people would still be left potentially on the margins.
So many different things we could dive into from there, Dante. I want to make sure we try and drive things forward here, though. Speaking of central bank digital currencies, there have been some rumors that China could be making major moves in that area as well. How do you see China in the big picture of the world economy and how digital currencies play out?
Here, too, I think the message and the response is somewhat nuanced. Naturally, there are a whole range of geoeconomic and other considerations to think about, but I don't see this wave of digitization of currency and payments as a zero-sum proposition, right? That there was an interesting article by the former U.S. Secretary of the Treasury, Hank Paulson, in Foreign Policy, where he talks about the fact that a digital currency is the sum of the parts. And so, in effect, if you digitize an asset that has underlying problems or a currency that has underlying potential issues, well, then you only have created a digital twin that inherits some of those good or bad properties. I think, what we're seeing in Asia and what you're seeing in China specifically is also in response to domestic needs, right? That unbanked and underbanked populations have turned to fintech solutions, mobile payment solutions, in effect, to drive a wedge between traditional models of pulling people into the financial system. So I think part of the motivation, looking at it from the outside of China's innovations, have a lot to do with domestic opportunities. Where there may be some considerations that people above my pay grade might want to consider is as it becomes an export product, and as you consider some of the international dimensions of these innovations, it does raise questions about global trade, currency, and foreign policy implications. But I think we're far away from a world in which those become so serious that we should lose sleep.
Speaking of losing sleep, a lot of people, especially in the press, have made issue of privacy concerns around not only Diem, but cryptocurrencies in general. It's something that I have a pretty open mind about, but how do you view the topic of privacy? It's something that's probably raised a lot with you.
Sure. And needless to say, it's a critically important, I think, criteria and principle that to preserve people's control over their money in a privacy preserving way, and to harmonize to a very high standard across the project and across the payment system around privacy is critically important. So much so that we've taken a privacy by design approach in how this network is built. The Diem Association, I should point out, and the payment system itself is really designed at first to be an enterprise payment system. So the consumer on-ramp to the payment system would be via wallet providers, or what is known in the digital currency parlance as a virtual asset service provider, or VASP. That's the on-ramp for the consumer and the market facing aspect of this type of payment network. And so clearly, other than information that would be minimally required to carry out a compliance requirement known as KYC, or Know Your Customer requirements, no other data would hit the Diem blockchain save for minimal transaction information that is on chain. But again, the preponderance of transactional information, the preponderance of customer information, or PII, personally identifiable information, resides at the wallet level. And of course, it also resides at the wallet level akin to the types of privacy controls that would be in place in traditional banking, finance, and payments, but also akin to a hardened standard around both the Swiss and European and other models of privacy. So we've been designing with that in mind from the outset, in the same way that we've been designing with financial integrity and financial crimes compliance as well.
Very interesting to see how that all develops. Something else that's been a bit in the news recently, especially with the attention on Donald Trump and some of his behavior on Twitter, was the topic of regulating, let's say, public space and free speech. Free speech isn't necessarily our focus here today, but you talked about the exchange of value on scale, and it raises questions about where these decisions about infrastructure and access and more are being made, whether it's in technology companies or in government. And as head of public policy at a major tech infrastructure builder, I thought you'd be a great person to ask for some thoughts on that.
Yeah, I mean, well, clearly these thoughts are my own and not necessarily the reflections of the association. But there is a question to be made and had about, one, the limits of what we construe as the digital commons, when in fact much of those digital commons today are private infrastructure and subject to terms of use and terms of trade, and candidly terms of market conduct. So I think the pendulum can't swing so far in the one direction that the public space has no pushback, but the public space must also acknowledge when in fact it is trading on private grounds, as it were. So I think that's a very nuanced conversation that has to continue and has to happen, both sides of the Atlantic and all over the world. And I think that same operating model must also hold true for financial services and the advent of fintech efforts coming into what has historically been very heavily guarded, very heavily protected, and very heavily regulated domains. And I think there's a calibration that will come of it that is ultimately very healthy in the end, because you would see an appetite, in my mind, on both sides of the aisle, both the public and private space, for more prudent, even-handed, and guarded approaches to this. And then you enter this other piece of the puzzle, what a lot of the crypto purists and blockchain purists identify as enormous opportunities to democratize control, to have issues like self-sovereign identity, to have real deep privacy-preserving approaches built into the hardware and software of how they engage with technology. So I think if ever there was a case for digital transformation at scale, 2020 was it. It compounded a decade a decade of digitization accelerated as a result of the pandemic. And with it, hopefully, we'll also come up with some models of rectitude and correction that are not so heavily handed that we shut everything out and shut everything down.
Fascinating year, as you mentioned, and I hope we can follow up in the final questions with some thoughts on that. Before we do that, I want to make sure we spend a few minutes talking about the people in all of this. And I know social impact is important, not only to your role, but to you personally. Part of, I think, the anxiety around these new technologies, not only about blockchain, but others that we're exploring now and throughout evolution in the economy, has to do with, let's say, the people versus the technology. And there are those who are very enthusiastic and understand things and want to push it forward. And then there's other groups that are, let's say, feeling more threatened and apprehensive about these new opportunities. How do you view that anxiety or that divide, especially right now in your area of focus? And how can that tie into some of the work around social impact that your role focuses on?
No, it's a great and very powerful question, John. And frankly, we have to be much more nuanced. And as you probably gleaned from the conversation today, this is sort of where I sit. I'm in the middle, right? That when you talk to people about AI, artificial intelligence, the end state in their imagination is the Terminator movie. When you talk to people about blockchain, the end state is an anarchic, completely distributed, decentralized world with no control and no government, right? And the end state isn't necessarily where we end up. It's somewhere completely in the middle. In the same way that I don't see stablecoins and crypto assets as competition with CBDC, rather I see these opportunities as locked in co-movement. And my beginning point, especially when we talk about financial inclusion, is the fact that a world with 1.7 billion people without access to a bank account, 1.3 billion who are underbanked, and what we saw in 2020, where even fortress nations and fortress regions, Europe, the United States, and elsewhere, were effectively brought to their knees by a virus that doesn't check in with the borders, doesn't check in with homeland security or clear passport control, effectively brought the global economy to its knees. And but for technology, we would have zero semblance of operating continuity. We would have very little semblance of access. Kids would stop learning at schools, healthcare would cease, and so on, right? So somehow we have to overcome the fear of the end of the negative spectrum and land in the middle. And so, for example, if to be banked means you need access to physical brick and mortar banking, then billions of people will continually remain underbanked or unbanked. And then they would be prey to underground markets, underground economies, and all of the things that come with that, right? So I think that's a world that produces enormous global risk, sociopolitical risk, and others. And so digitization alone is not a panacea, but when you marry it with regulation, responsible alignment of public interest, and a pro-competition standard, you could actually do quite a lot more for people. And my proxy and my metaphor for that would be messaging. That if you consider how many people now have access to telephony, low-cost information sharing, and the internet, because we have leapfrogged fixed line infrastructure, the same has to happen with financial services and payments.
I share a lot of those views, and I think some of the sentiment that comes behind them and the values that go behind them as well. We've talked about COVID. I wondered if there are other trends in 2021 and beyond that really interest you or inspire you with what you're doing at Diem.
Yeah, so the COVID-19 pandemic, of course, we're still in the throes of it, right? And I come at the work that I've done in risk management and resilience with a sort of sense of deep expertise around, how do we overcome as a nation and as a world some of these deep problems. I serve on the Federal Emergency Management Agency's National Advisory Council, so I've been watching the advent of COVID for very closely, and I've been advising against the specter of a pandemic or epidemic risks for many, many, many years now, both in writing and in every other forum I had. And so now that it is upon us, and now that we have to contemplate what the reset or correction looks like on the other side, my recommendation, and I have a pretty extensive report about this called The Great Correction, my recommendation is look at all of the things that were the first to fail, and those should be the things that are the first to fix, right? So if, for example, relating it to payments, right? The governments of many countries mobilized an unprecedented government-to-citizen stimulus model to get effectively the weakest households and the weakest businesses propped up to avoid any type of failure. That model hinged largely on analog infrastructure and analog approaches. So the advent of digital payment systems, stablecoins, central bank digital currencies, the whole of what this wave and this wave of innovations proposes would have been a difference maker in that crisis. And so I see a lot of this as build more optionality into financial systems and other systems rather than competition or disruption. I think we really have to figure out how to complete aspects of the global economy that have left billions of people behind, and domestically, where those same networks run into continuity issues or failure issues because they're riding on legacy systems.
That was an interesting point you made just there, Dante. Could you say just a few more words about your thoughts on disruption and competition versus providing more optionality? How does that look like from, let's say, a more abstract perspective?
Yeah, well, I'll try not to. I feel like I've been a little too abstract in our conversation today, John, but you're asking the right questions and the answers are a little bit nuanced. So I'll give you an example, right? And I'll borrow the case of Sweden. I've had a number of occasions to share and dialogue with public fora with the Swedish central bank. And they have a very eyes wide open approach about just the usage of money and how there's a decline, not only in Sweden, but in many countries around the world. There's a decline in the user adoption of physical currency. Another colleague in this discussion mentioned that if you went to a regulator today with a proposition for a new innovation called cash, that the regulators would probably not approve it because of a host of issues. Its opacity, its anonymity, and in the context of a public health crisis, the ability of cash to be a vector of spreading disease. And so digital isn't alone a fix, but not having digital in the context of a public health crisis like this one, calling for quarantines and lockdowns and effectively all commerce to shift online, is a public sector vulnerability, right? So it's as much a national security or domestic security risk to not have many modes of payment. So if you were running the country or the economy, you would want complete redundancy. And that would imply an omni-channel, end-user controlled payment network that completely empowered people and would work online, offline, in micropayment or in large sum with a very, very standardized model. That type of infrastructure does not particularly exist. And so you have what we have today, walled garden payment networks that are not interoperable. If I wanted to send money to you in Switzerland and vice versa, how many options could we turn to, and at what speed and at what cost, and what's the trade-off? That to me is a vulnerability. We ought to fix it. And the void is being filled by non-compliant, intransparent alternatives that aren't going through anything close to the rigors that we're trying to put into place for the Diem project.
It has been nuanced and a bit abstract, but it's also been fascinating, Dante. Thank you very much. I really appreciate that. Are there any final thoughts you'd like to share before we sign off?
Well, other than to say thank you to you, John, for the great discussion, and to the listening audience, to say a word of thanks and wish everyone continued good health through the course of getting out of the pandemic. I'm just grateful for the discussion this morning.
Great. Well, we're looking forward to it as well. I won't make any forecasts about when COVID will end, but hopefully when it does, you'll be here in Switzerland in the future. We've been following Libra and now Diem for a few years since it got started, and very proud that it chose Switzerland, and very impressed by the model you're following. So thank you again for taking the time to share more insights with our audience.
It's a pleasure, John. Thank you.
All the best, Dante. Take care.
Thanks.